Democratic Congresswoman Jackie Speier of California. Thanks to both of you for joining us. Congresswoman, I do want to start with you. One of the pieces of legislation you actually were somewhat successful, I guess I would say, is on this move to cap leverage at the banks, so that banks could not borrow more than they would be able to pay in a worst-case scenario. But that was watered down just a little bit. Was that a disappointment for you?
Well, of course, when you have a measure that you have worked on and it's not exactly what you wanted, it's disappointing. The good news is that there is going to be a cap on leverage and that we're going to require the regulators to impose a cap as well. You know, when the market started careening out of control, Bear Stearns, Goldman Sachs, all of them, Lehman's, were all at 30 and 40 to 1 in leverage. And most experts tell us now that if we had just had something in place capping leverage, we would have been much better off.
Well, Congressman Hensarling, I mean, you were very vocal. You were against financial regulatory reform. You believe that it did not work in its form. But let me ask you this, now that it is going to go through, do you think that this does solve the too big to fail issue for banks?
No, absolutely not. Instead, it institutionalizes us as a bailout nation. It creates a permanent bailout authority, ultimately, that can be drawn upon from the taxpayers as we sit here and we are mired in the largest national debt in our nation's history. It also has the ability to impose a bank tax. Now, how anybody's mortgage rate is going to go down, how they're going to get extended a greater line of credit through a bank tax is beyond me. The answer to risky Wall Street behavior is not bailouts, it's bankruptcy, and that's what the Republican bill would have done. Now, there are changes and enhancements that needed to be made, but ultimately what the Democratic bill does is enshrines us as a bailout nation and creates an entire class of too big to fail companies. The big will get bigger, the small will get smaller, the taxpayer will get poorer.
Congresswoman, can you respond to that?
I sure can. You know, it's a catchy phrase. It's just not reality. The truth is that for over 10 years, we deregulated the financial service industry, and this is what we got. It's time to reimpose a law, much like Glass-Steagall, that basically kept the various financial institutions separate. It is now going to be a law of the land that derivatives are regulated. A law was passed in 2000 prohibiting Congress from regulating derivatives, and look what it got us. So the bill, soon to be law, is going to create predictability and restore confidence in this country so that consumers and businesses can move forward knowing that they are not going to be ripped off.
Well, it wasn't deregulation that got us into this problem. It was dumb regulation. And we had all kinds of federal laws and regulations that incented and mandated and strong-armed financial institutions to loan money to people to buy homes who couldn't afford to keep them. And at the epicenter of this were the government-sponsored enterprises, the monopoly powers they were granted, and then they were told, go loan money to people who can't afford to pay it back, known as the Affordable Housing Mission. That was Congress. That was two successive administrations, and this bill does nothing to treat the underlying cause and leaves the mother of all bailouts, Fannie Mae, Freddie Mac, on the books.
Yeah, Congressman, you've got, you know, the criticisms are both, this is an example of broad government overreaching, and at the same time you're saying this bill doesn't do enough to remedy some of the problems. You can't have both of those.
Well, again, it's not a matter of deregulation, it's a matter of dumb regulation. I want regulation that creates transparency and an effective disclosure for consumers. I want to make sure that with respect to insured depository institutions that we have proper capital and liquidity requirements, but otherwise, again, I don't want a system where you have socialism on the capitalism on the way up, socialism on the way down, privatize your profits, socialize your losses. And again, the policies that led us here are in place.
Congresswoman Speier, I want to jump in and just ask you, I mean, we just heard from Rich Edson at the top of the hour saying the biggest nightmare here is that this gets in the way of the competitive nature of Wall Street. It takes away the ability for this country to be competitive in the financial industry. Going forward, since the Senate has cleared the way, what does the landscape look like? I mean, there's a lot of concern here.
Well, let's put this in perspective. When we deregulated everything, when we took off the 12-to-1 cap on leverage at the SEC, when we said that you did not have a fiduciary duty as a broker, when we did all those things, it was because we wanted to be more competitive. Mike Lewis, who wrote The Big Short, said the biggest crock was this whole concept of, oh, creativity. We need to be able to work in a global market. We'll be plenty competitive. We just don't want the taxpayers of this country picking up the tab again while the rich get richer.
Well, the
I would just ask my colleague, why do we have a taxpayer bailout fund in the bill?
Well, Congresswoman Speier, though, I have to pick up on something that you said. I mean, we've had analyst after analyst tell us on the financial side that all banks are going to do is take these extra fees, the services, all that, the charges that they're going to have to rack up to deal with the new bill and the new regulations, just pass it on to the consumer at the end of the day. That's exactly what they plan to do with this. The consumer suffers.
Well, first of all, wait a second. Let's talk about what's being charged. We have an FDIC. It's an insurance policy for smaller banks. The big banks, though, there was no insurance policy. So if they went bankrupt, it was us that had to pick up the tab. Lehman Brothers went bankrupt. We picked up the tab. In my county alone, $150 million lost in what was supposed to be secure investments. So we are creating an entity much like the FDIC, which has worked very well. Now, we wanted the banks to pick up the tab for the actual function of this new authority. Much like if you're a doctor, you pay a fee to the medical board.
The bank tax. But again, but they still, and that did make it, but at the same time, Congresswoman, the banks would still pass on. If that $20 billion did pass, that bank tax, that still would have gotten passed on to the consumer. The consumer's still going to suffer. And banks are telling us that no one's knocking on their doors to get loans. Small businesses are worried about what's happening in Washington, so they're not coming in and asking for loans. They're not going to hire anybody. So you still got to.
Well, first of all, I got to tell you, having a Consumer Protection Bureau is a huge win for consumers in this country. That is going to make sure that you don't have the subprime loan market made up of a lot of those big banks that were basically steering people into subprime loans when 60%